It was almost 30 years ago, 1993, Manhattan, New York. The city was busy as always. The stock market was experiencing a rapid rise due to the advent of the newly born tech companies that were known for sharing only one thing in common. Their name had one important part in it, and that was .com. It was the commercialization of the internet, and almost all companies were going towards being a .com company. And of course, people were putting money in the stock market as long as they knew that they were buying shares of those internet startups, or better to say, .com companies. They were not checking anything like the financial statement of the companies or their profit and loss. And of course, only thing was important for them that they were buying shares of those newly born .com companies. A huge bubble was formed after an increase in demand of those companies, and that led to an increase in the technology-dominated Nasdaq index, rising from under 1,000 to more than 5,000 between 1995 and 2000.
Given the decades of wisdom that has built up in the business world, investors, it sounds like you're saying, are making a big speculative bet if they're investing in your company's stock.
Well, I think all internet companies, the stocks are incredibly volatile, and
But even long term,
long term, I believe that it's very easy to predict that there are going to be lots of successful companies born of the internet. They're going to have very large market caps and so on. I also believe that today, where we sit, it's very hard to predict who those companies are going to be. So you can make bets on these things, and I think that Amazon.com, if we're not one of those important, lasting companies born of the internet, we will have nobody to blame but ourselves, and that we will be extremely disappointed in ourselves. But there are no guarantees.
Then, when the market was at its peak on 10th of March 2000, some of the leading high-tech companies such as Dell and Cisco placed a huge sell orders in their stock. And of course, that made everybody panic, and people started selling their shares before facing a huge drop in their price. So the stock market lost its value within a few weeks, and eventually in 2003 that bubble bursted and the economy fell into recession.
Amazon.com is attracting a lot of attention on Wall Street, but the company's stock is a hot new property.
Today, Amazon.com went public, and it seems to be trading well.
And of course, this recession was one of the biggest recessions of the century, which then spread out to some other countries as well. So the US central bank and the government needed to do something in order to help the economy to get out of the recession, and in this case they used monetary policy, which they lowered the interest rate. And certainly that lower interest rate helped people to borrow money from the banks easily. As a result, those borrowers took advantage of lower interest rates and mortgage rates, and more importantly, subprime borrowers, which they didn't have really good credit or really high income. They finally said to themselves, okay, yeah, probably that's the right time to take our dreams and turn it into reality and finally be a homeowner. So after a couple of years, the central bank saw that the people are doing pretty well and the economy got back to normal. So they decided to increase the interest rate eventually, and also the home ownership reached the saturation point. Of course, that means that the demand for houses went down, and the decrease in demand led to a decrease in the home prices. After the central bank increased the interest rate, the subprime borrowers, which they didn't have really high income, they saw that they couldn't continue paying for their mortgage at higher rates, so they started defaulting on their loans. So that was how economy faced another recession in 2008, and that lasted until 2009. And of course, not to mention that a lot of big investment banks such as Lehman Brothers went bankrupt in this period. Flash forward 11 years later, in the beginning of 2020, the deadly coronavirus started spreading in the entire world, and it was so contagious that it reached every country and it made the world a darker place to live in. As a result of that, many businesses had to shut down. A lot of people have lost their jobs, and unemployment reached its all-time high after a very long time. It's been said that this is the worst global economic crisis since the Great Depression of 1930s. So what we can conclude from this video is that one recession could potentially lead to another recession. If we take a prime example of that is the 2001 recession, which is a dot-com bubble. The central bank needed to decrease the interest rate by using monetary policy, and that decrease in the interest rate with some other factors, they led to 2008 and 9 recession, which is a housing bubble recession. Alright guys, it's a wrap for today. Please make sure to smash the subscribe button. Also drop a like if you enjoyed this video or if you learned something from this video. I'm Sadat and I'm out.